Hello everyone, it's Thursday and you're watching Within the Frame. I'm Kim Bo-kyung. The year 2023 was indeed a tough one for the global economy. As part of efforts to contain worldwide inflation, major banks had to stick to a restrictive monetary policy, which led to concerns over the unemployment rate and sluggish business activities. Though exports are showing slow signs of recovery, South Korea too had long suffered from continued high interest rates, and thus the economy is expected to grow in the low 1% range next year. How has the global economy done this year, and what are uncertainties lying ahead for both the global and South Korean economy? For this, we have invited Professor Oh Joon-seok, Dean of Sookmyung Business School. Welcome, Professor Oh.
Good evening.
And we also have Professor Hwagyun Kim from the Mays Business School at Texas A&M University. Good to see you again, Professor Kim.
Good to see you again. Thanks for the invite.
All right, thank you for joining the show. First question, let's talk about with OECD's data. The OECD cut this year's global economy's growth rate to 2.9% and maintained next year's projection at 2.7%. How do you assess this year's global economic growth, and what is your view on next year's?
As you mentioned in the very early part, this year the global economy has experienced significant the difficulties. But despite that, I think has been doing really well. And due to the there's two wars going on and also the tighter financial conditions, clearly the OECD and some other agencies start lowering down the projections for this year. But it's almost at the end of this year now. And also the next year is going to be relatively lower growth rate prospects for most of the countries. So if you look at the OECD report, they also have projections for 2025, and actually that's about 3%. So kind of pattern is now it has been doing well, but slightly going down, and the next year is going to be slumping further down a bit, and then it's going to have like better and full recovery in 2025. I think that's many the experts' outlook, and I tend to agree with it.
All right, it's going to recover in 2025. Now, Professor Oh, like our Professor Kim already mentioned, we have two wars raging in the Middle East and Europe. If those wars become expanded, how would that affect the global economy in 2024 and 2025?
No doubt, negatively affected the overall economy in 2024. What worries more, in accordance with geopolitical risk, is global financial outlook would be worsened as sequence. Talking about overall economy, global economic growth will slow even more in 2024 due to high interest rate, increased energy prices, and a market slowdown of China. And the U.S. economic growth could slow to 2.6% next year from 2.9% this year. While economists generally agree the world will avoid falling into recession, they highlighted the possibility of a mild recession. I agree. Also as well, this is a mild recession 2024, especially in Europe and in the U.S. With the Fed raising interest rate at a breakneck pace to fight inflation, U.S. economy could barely manage to handle the situation now. The strength of the economy in 2024 will be driven by consumer spending, which accounts almost roughly 70% of U.S. GDP. Despite chances of a soft landing, here what I mean is curbing inflation without killing job opportunity, uncertainty due to wars make the future hard to predict. So long as the labor market remains strong, consumers are likely to continue their spending spree. There comes a signal, especially in the United States, they could deserve to enjoy both modest growth and disinflation simultaneously, recklessly by increasing home lending. Korea also has stocked up lots of assignment of project financing risks to solve in the financial industry. It is not a time for consumers to inflate consumption, but it's high time to reduce debt balance as quickly as possible. Let's not forget that falling inflation and resilient growth are not a common combination for most economies. One of the two might only be an economic illusion.
All right, I see. So there could be mild recession in 2024, and two wars right now raging, and the word could be one of uncertainties. All right, well, Professor Kim, let's delve deeper into each country's economic situation here. Though high inflation led to a continued tightening policy from the Fed, both hiring and spending remain solid in the U.S., showing how robust it is. How did you see the economy in the U.S. this year?
Well, the very early part of this year's projections, most of the experts, including their own, the forecasting agencies, have very negative views. So it's like 0.9% growth or maximum 1%. But despite that, I think the GDP is likely to grow about like 2.6% and netting out inflation, right? So this is huge number for the economies like the US. And I think it is quite related to the robust households, actually balance sheets, because that's partly coming from the strong wage growth of the US. The Fed actually was worried about the too strong labor markets because that actually can overinflate the economy because the monetary policy was kind of tightening. But still, I think this was working well, probably because the firms made enough money, I think, in 2022 and 2021, and they used that actually to hire more people because the excessive labor demand actually was there in the U.S. And that probably contributed positively to the surprisingly positive economic growth of the U.S. in 2023. I don't think they have very positive view on 2024, but still, I think they managed to well this year, definitely.
I see. So the overall, the U.S. economy was quite robust. And that being said, Professor Oh, some expect the U.S. economy's such a resilience to continue, making a soft landing and returning to the Fed's 2% target without a sharp rise in unemployment a possible scenario. However, others also say there is a recession to come next year. What's your forecast for the U.S. economy in 2024?
Yes, there are too many forecasts. I take in the middle, not go to the extreme. According to the recent report by Bank of America, expect a GDP growth of 1.2% in 2024, 0.6 percentage point above its prior forecast, and unemployment rate of 4.2%, down from 4.4% of the prior forecast, and inflation of 2.2%, down from 2.4%. Might be Professor Kim knows better and feel better the atmosphere of the U.S. economy deeply inside. I'd like to see the U.S. economy from outside. In brief, I could draw a more optimistic picture based upon the better than expected performance of the global economy in 2023 and the fact that GDP growth and employment have held relatively steady in major economies facing extreme inflation. What is more encouraging is the volatility of a global supply chain that dominate the U.S. economy over the pandemic period to diminish. In 2023, the predictions were unanimously a recession, as Professor Kim commented, in heading to the 2023. There are negative forecasts. Consumers struggled with high prices amid the rising inflation, may fear a downturn as severe as 2008. But the U.S. economy has done better in 2024. U.S. growth is still growing, but could outperform expectations in the first half of 2024. Many of the drivers of U.S. inflation have been related to supply shock caused by supply chain disruption, mostly comes from China. Now that supply side risk insulation have helped to bring inflation down more rapidly. It opens the door for inflation to lower down without putting policymakers into the corner of demand destruction. Looking into the late 2024 and 2025, overall growth will return to more stable pre-pandemic rates. Inflation will hover at around 2%, and the Fed will lower rate to just below 3%. This will contrast sharply with a recessionary condition in Europe and even in China.
All right, thank you for your projection, Professor Oh. Now, Professor Kim, I'd like to delve a little bit deeper into Fed's decision. It hinted at possible rate cuts to come next year, at least once, although many believe there will be a total of 3. The question is when and to what extent. Could you give us some scenarios and factors the Fed would consider before pivoting?
Right. As I just typically talk about this, if you look at the Fed Watch, the Fed futures, the probability of the lowering rate. Clearly, probably next March is going to be the first time they start lowering. Typically, monetary policy looks at inflation and economic growth. So if inflation is above the target, and then they tend to increase the interest rate. And if the growth is actually too high, then they also increase the interest rate. And then also they also look at the financial market conditions, so that if the liquidity conditions are bad, then clearly they try to inject more money by lowering the rate. So these kind of things will be the main factors clearly. So if they think that inflation is going down faster than they think, then maybe they can actually lower the interest rate a bit early. And also if the growth is getting slower than they expected, then they may lower the interest rate early. Obviously, the opposite story is also true in that if inflation is not going down very fast, then clearly they'll try to maintain the high interest rate a little longer so that they can actually keep just tightening the economy. So it's going to all depend on the inflation and the growth news. Of course, the market condition, global market condition is going to be another factor, but that's probably going to be the last one in terms of priority.
All right, I see. So rate cut could first come in March, but later on, the Fed would have to consider many variables, including especially the inflation and growth rate. All right. Well, Professor Kim, we have been keep talking about U.S. economy, but China, the world's second largest economy, also affects the global economy as well. And so I'd like to talk about Beijing. It had to go through deflation and a real estate crisis, and is still struggling to put those issues behind them. How is China's economy right now, and will Beijing continue to struggle next year?
I think it's probably a good idea to look at some data. So I just looked at the OECD report, the same report that you mentioned today. And China's real GDP growth has been around like 6.8% between 2013 and 2019. And then in 2022, 3%, and then projected to be about 5% in 2023 and 4.7% in 2024 and 4.2% in 2024. Of course, this is just a projection, so who knows? But at least as you can see, the pattern is it has been pretty high, around like 7%, and then it's going down like to 4%. So you can see that it's a big drop over the next 3-4 years. So clearly, China is cooling down. And after all, China has been growing for like 3 decades, like in the speed of like 15% per year, which is crazy in a sense. So given the size of the economy, right? So I think that basically tells a lot about the Chinese economy probably for the next few years, because as South Korea also experienced a bit of a slowing down in the 2000, although I think the stable maintenance actually of the growth rate existed. So that China probably has to go through something similar. And given that they really overinflated the economy in the past decade, especially through the real estate market and some of the other industries, heavily backed by government, I think, it's probably inevitable to see some big slowdown. Hopefully, I think it's a little more stable than volatile. But I think, it's probably going to be the reality that we will see some slowdown, probably up to 3.5% for the next 5 years or something.
All right, I see. So China could have to go through a long-term slowdown, as our Professor Kim just mentioned. All right. Well, Professor Oh, moving on to South Korea's economy. Though it climbed back to above 3% after falling as low as 2.3% in July, South Korea put a great deal of effort into containing inflation this year. Will the rate be able to reach the 2% target next year?
There are too many variables combined, but I suppose it would be very hard for Korea to reach targeted inflation of 2%, though the pressure might be dissipated by the countervailing government policies. The BOK turns on the forecast of 2024, not that bright, but only dimmer. The BOK maintained its GDP growth estimate for this year at 1.4%, but slashed it and adjusted next year to 2.1%. Meantime, the BOK board raised its price forecast for 2024 to 3%. They themselves forecasted 3%, which implies keeping a restrictive policy stance and confirming the need to tighten further, longer, including monetary policies and geopolitical risk afterwards. highly feasible scenario of 2024 might be Korea undergo a modest recovery of export amid slowing domestic demand growth. On the domestic demand side, private consumption and equipment investment remain subdued. Exports will be a moderate decline with semiconductor demand rebounding up, even though global trade momentum diminishes, mainly due to contracting of demand. Inflation trend changes into a declining trajectory, with losing momentum of employment expansion, notably within the service sector. As the global trade market is not recovered yet, surrounded by prolonged uncertainty, contractually trade structure still goes on in 2024. The decline of export will be slowed, but not recovered completely. Considering both domestic and external economic conditions, Korean economy will be projected to see a gradual deceleration in domestic demand growth. And as exports begin to rebound, the contraction in economic activity is expected to moderate in 2024.
All right. Thank you for your point of view, Professor Oh. Now, Professor Kim, we also need to talk about debt. Though the Bank of Korea froze the key benchmark rate at 3.5% on several occasions, the interest rate was indeed high for a long time, and this pushed Korea's combined household, business, and government debt to about 4.6 trillion US dollars this year alone. How concerning is this for our economy?
It can be concerning because in classic, the finance theory, there's the theory called debt overhang problem. It's not just a theory, actually, it is an important issue. The debt overhang problem is basically if the pre-existing debt is already high, then, economic decision makers actually cannot make additional investment projects, or they cannot consume actually or smooth their consumption because the debt is already high, therefore they cannot make additional debt. And that actually really reduces the scope of their economic activities. And that's, I think, what we are somewhat facing with in case of South Korea, much more so for the corporate sector, especially small firms, and then even some of the large firms with really big debts. And but I think still also major issue is the household debt, especially with the real estates. And the government also has some issues, although it's much less actually severe. So clearly, this issue is big, especially if the new investment opportunities come up in the near future. So I think both Bank of Korea and the supervising committees, I think Korea should take a look at closely how the financial markets unwind, especially in terms of the debt market, corporate debt market, for instance, so that no domino type of effects actually is not going to happen, because contagion is very severe, actually, in case of financial market if something bad happens.
All right, we would definitely have to tackle it. Now, Professor Oh, I'd like to ask you this. Many experts say the year 2024 is going to be very crucial in determining whether our economy will be on the path of sustained growth or face the risk of long-term stagnation. Could you give any advice for the South Korean economy to wisely get through the upcoming year?
Firstly, let me borrow a word from the OECD. Relatively longer perspective, it called on Korea to push for a measurement to bolster financial and fiscal soundness, given its rapid population aging. Against the backdrop of rapid population aging, spending pressures are not set to increase by approximately 5% of GDP by 2040, according to the OECD long-term model, driven by pension and health expenditure. But personally, we have to think to our very best to make a current shift of the industry toward the digital transformation. That is an urgent top priority, I might say, to gain and retain momentum of economic growth. Digital innovation by forming an ecology system of digital startups could be a trailblazer of industrial information. It might also be efforts to lower productivity gaps between large companies and small and medium companies, expanding market and business scopes, and reducing labor market dualism, not going to extreme.
All right, I see your point. Now, Professor Kim, may I ask you the same question as well?
Well, I think Korea has been growing for the last 40, 50 years. And there were many crises and difficulties, but I think South Korea overcame pretty well, I think, this type of difficulties. I guess from now on, as Professor Oh mentioned, I think this new businesses actually will be very important. And also focusing on semiconductors and the things that we already do well, I think is very important to keep. What I actually would suggest a bit also is some of the industries that the other countries do not look at seriously should be the good potential industries that South Korea has to look at. After all, the South Korea grew by just looking at the industries that other advanced countries actually didn't look at. So such as like, some of these, for instance, like military spending, I think are going to be important. So the military industry is going to be also important. Now we export. So I think we have to keep pushing. I know that the green energy is important, but at the same time, there's more brown energy sectors actually we shouldn't neglect because more efficient brown industry is not going to go away. So those kind of things should be kept being invested, and those kind of things would be important to the just to make the economy just to look better in the upcoming years, I believe.
All right, I see. So we would have to focus on some of the overlooked industries such as military. All right, Professor Kim, thank you for your suggestion. Well, I like to ask many more questions, but unfortunately, this is all the time we have for today's edition. Thank you, Professor Oh and Professor Kim, for your time and insights.
Thank you
we
for
really
having me.
appreciate it. Thank you.
My pleasure.
All right, that's all for Within the Frame tonight. We'll be back tomorrow with more in-depth stories. Thank you for watching and goodbye.